Well, Facebook is just a party pooper. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today, giving up the 4-day rally as Meta, spoils the bounce back in tech. The social media giant stock is plunging today, falling as much as 26% earlier in the session after a big Q4 earnings miss. For only the third time since going public, Facebook missed profit expectations at the end of 2021. User growth also fell short, and a weak Q1 outlook was the nail in the coffin. Meta forecast revenue of just $27 to $29 billion this quarter, but Wall Street was looking for that number to top $30 billion. Now, following that miss, JP Morgan analysts downgraded the stock to neutral today and lowered their price target. The group said that Meta is, quote, seeing a significant slowdown in advertising growth while embarking on an expensive, uncertain, multi-year transition to the metaverse. For the first time, yesterday's report did include financials for their metaverse division, called Reality Labs. Just in 2021 alone, they lost nearly $11 billion. Now, Facebook is dragging down its peers as well, with Snap tumbling nearly 20%, actually, Pinterest falling 7%, and Twitter down nearly 6%. Now, Spotify is also down sharply today on more weak guidance. The stock has fallen about 15% after the music streaming service forecast slowing subscriber growth this quarter. Spotify said it expects to add just 3 million new premium subscribers in Q1, missing analyst target by 1 million. But the company says this is not a Joe Rogan-related issue. During the earnings call, CEO Daniel Ek was asked specifically if that weak outlook was related to calls from artists to boycott Spotify over claims of COVID misinformation on Rogan's podcast. No, was his response. He said the Joe Rogan Experience remains the #1 podcast in more than 90 markets, but he does have to abide by Spotify's content policies. And today may not be the dip to buy as the market turns its focus to Amazon. The online retail giant will round out earnings for FANG stocks after the close today. Amazon shares are down about 6% and on track for its biggest one-day drop since back in July. The pullback comes after PayPal warned at its earnings about declining e-commerce demand this year. Now, the focus for investors is on Amazon's outlook, and if it comes in weak, you can expect another bloodbath, I would guess. And Tesla shares are a different story. They're up today despite the announcement of a massive recall. The electric automaker issued a recall for more than 817,000 vehicles related to an issue with the seatbelt reminder. You know that annoying ding if you forget to put on your seatbelt while you're driving? Well, I guess it wasn't working in some Tesla vehicles. The recall covers the 2021 and 2022 Model S and Model X, the 2017 through 2022 Model 3, and 2020 through 2022 Model Y. No big hassle for owners here. Tesla said they'll fix the problem through an over-the-air software update. Don't even have to take your car into a dealer. What a concept. The automaker says no crashes or injuries have been reported due to this problem. And our economic news of the day is pretty good. Weekly jobless claims came in lower than expected this morning. Labor Department reporting that 238,000 Americans filed initial claims for unemployment benefits last week. That was down 23,000 from the week before and lower than 245,000 expected. Continuing claims did fall by 44,000 to just about 1.63 million, coming in a little higher than expected for the week ending January 22nd. But now it's time for the January jobs report. Expectations have soured after a big unexpected drop in private employment from ADP on Wednesday. Remember, economists were expecting ADP's report to show an addition of 200,000 jobs in January, but they actually reported a loss of 301,000. The official consensus estimate for tomorrow is for an addition of 150,000 jobs last month, but many analysts are now expecting a loss, and the White House has been laying the groundwork since last week. Officials have been saying the surge in workers out sick with COVID in mid-January will be to blame for weak job growth. So give me your prediction for the report tomorrow morning, and if you think it's actually related to COVID or something else? Sound off in the comments, and don't miss the Wall Report tomorrow. We'll be breaking it all down at noon Eastern.